specific criteria that you look at that you could share? Do you have a minimum debt coverage that you go for? Like what are your 2 or 3 kind of key metrics?
Most of the debt coverage is actually 1.8. And actually the deal we bought a couple of months back, Freddie and Fannie were fighting over it, which we loved it, because we have a great team partner with Northmark, our loan broker. And we never, ever put an LOI until we have a full approved loan, by looking at the whole numbers and everything, because I've closed all 27 deals from LOI stage to the final stage, by the way. That's 100% record. Yeah. I've never backed away from any. Oh, wow. And in the last deal, we even put hard money because we were so sure that we're going to get that deal and we're going to get it sold. I mean, we closed it in 54 days, not even 60 or 75, but I put 250 hard money, non-refundable day one. My partner put 250 also. So $500,000 was hard when we signed the contract. After 25 days, we put another 250 and 250. So 1 million was hard, non-refundable on the 26th day. Yeah. So in the big league, that's how we got awarded the contract, by the way, just to let you know, because the seller did not take $53 million deal offer, but they took 51.825.
Makes sense. Okay. Real quick, the 1.8 debt coverage, is that in place or pro forma?
Okay, in place. It has to be the numbers right now. Yep. We bought it at 6.1 cap, just if anybody asks that number, but the going cap rate over there is 5.75 in the area we bought, Okay.
Yeah. Perfect. All right, Ben, what are we missing in the group? Anybody have some questions that we should get to?
More? I had a question.
All right. Let's just go with your question. Forget everybody else. Forget these 50.
You have a minimum buy on your syndication deals. 100,000. 100,000 is the minimum, but then we give a tier presence in the sense 7% return for under 199. Then we do 8% preferred from 200 to 499, and then 9% return after 500,000. This has really helped me a lot to move my people from 100 to 200.
Sure.
Because we love to have less number of people. Why not, investors? And then the second thing is we do 70-30 split. I will never, ever, ever do a syndication where it's 90-10 split. A lot of people are doing that. What that tells me is that there is no meat in the bone and you're giving everything to the investors. You're working like a peon, for 5 years to get your 10%. That's just not right. And I don't teach that.
That's fair. That's fair. All right. That's a great question. Thank you to, I think that was Melody. Ben, what was your question?
Oh, there were, I just saw a question saying what percentage of ARV are you buying multifamilies at? I'm guessing we can extend that to how big of a value add are you looking for these deals as you're going up in asset classes? Is that still something, what the value add?
Surely. I would love to share an example. All my examples in my academy also are live examples. I show them my Dropbox, my files, my underwritings, my templates, everything. So I just did a renovation deal. Just would love to tell you, my new company, Jamie and Ben, I started in 2014, by the way, in November. I started 2 companies back in 2007 and 8, and we did 14 syndications in that one. I've done 13 syndications in my new one in just 5 years, not even quite 5 years yet. So I'm going bonkers. This is my 8th one, 14th one. And then next year we have goal set to get 4 properties worth 200 million. That's our goal, right? And we can do it because raising money is not that hard for me. The good part is I would love to say I bought this deal, a C class, south of Houston. I bought it, Ben, at 3.550, 16 burnt units were there, by the way, 16 burnt, 1 building. I bought it. I said, I know I'm going to build it back up. And I built it into class A, hold on, that's 16 units. And I sold it in January of this year for 8.5 million, 8.5 million. So I gave tremendous returns to my investors, but changed it from a C to a B. Now, the ones I'm buying now, they are B or B plus already. So they will never become A. They will never
Right.
become A, but we're going to just add more amenities to it. Yeah.
Makes sense. We have a quickie I'd like to get to. This is from Hendra, who does run the San Francisco group, by the way, for
Oh,
us. So
sure.
welcome
Sure.
to Hendra. How do you create and cultivate the investor database? How do you create and cultivate your investor database?
Oh my gosh, I'm so glad you're asking this question, Mahendra. You know, what happens is I started from zero investor, just like everybody does, right?
Yeah.
The biggest thing is educating the investors. Never ask for money. You got to educate them, educate them, educate them. So I developed a brochure now, 30-page long, which I give it free. It cost me $10,000 with the graphics and my syndication attorney going through the language and everything to educate my investors. And if they like what I show them in the package, then they will draw to you. That's the number one thing. The second thing is you never say investors alone. I want to teach something right now. I always say my elevator pitch is, hey, Jamie, I'm Vinney Chopra. You know, I have a commercial company and we are always looking for equity investor partners. Oh my gosh. You've got to use all these three words together. Equity, because people want to be equity partners, not debt partners, not give you the money and then walk away. Investor in the middle, then partner, because see, in syndication deal, you're getting limited partnership and general partnership. So you're bringing them as a partner into the deal. And then you say, we are looking for value add in B or C class, which are, properties in A and B areas. That's what we did in San Antonio. We bought 7 deals in Alamo Heights, which was the nicest area of San Antonio, but we went for C class in that area and we made a lot of money there.
I'll bet. So can you take that one step further? So it's brilliant, the equity investment partners. And I love the point that you said that you don't ask. And I think this pivots into a discussion about raising capital, which is a limiting belief for a lot of people, me included. It's not an easy thing for me. So I guess my question is, so you do that, you talk to people, and I've had this happen. Hey, let me know when you have a deal. I'd be interested in investing with you. I'm sure that's sort of the return you get often. What then do you do? If you can get a little tactical with us, do you keep?
I would love to. Oh my God, this is amazing. See, the thing is, money's not going to flow right away when you just tell them, hey, I got a deal today. When you meet with them, you got to log in. Remember, you got to log on to CRM and everything, because SEC ruling is very, very strict, making sure we have logged activity, communication, everything with the investors. Curation period is there. You got to have a deal in the future. The wrong thing is to have a deal and now you're talking to the investors. Mm-hmm. That's not allowed by SEC ruling, by the way. A lot of people are doing it wrong, but we need to actually have cultivated relationships with family, friends, and everybody in our circle beforehand, then have the deal. But let's talk about it now. The thing is, you got to not leave them alone. You got to send them newsletter. You got to let them know why you're purchasing in Orlando. Like in my case, send them a bulletin, which shows the job growth and the new companies coming in. See, the investors are making decisions, small decisions leading to investing with you. They want to see you as a professional, not as a money grabber, right? So you want to make sure that you are building relationship. That's the word. Building relationship. You are letting them know, hey, I just want to let you know, this is the property I'm looking at right now. We have not gotten it under contract. Oh my gosh, what did you do? You are now sharing with them this deal you're looking into. They will get even more into it now. They say, oh, wow, so maybe some deal is coming. So my job has been just to educate the investors and keeping proper communication lines. That is the huge part in my business.
Before any deal, before anything, you're just in constant communication with folks. And it sounds like you're never asking. You're never actually asking, it sounds like, right?
Never ask. You never. Because see, grabbing, somebody say, hey, would you like to invest 100,000? Cold, hard, it's hard-earned money. I mean, people have so many different thinking, they lost money or whatever happened, right? You got to unravel all those things and make sure that they are believing in real estate deals. They're living in apartments. That's why my whole educational brochure is very explanatory, how we operate, what happens, how the cash flow comes, how we increase the value of the property, how the tax ramification is there, why we buy multifamily, not single family, all those things education wise. At the end of 20, 30 minutes, they are more knowledgeable than anything. And then they will tell other people and other people.
That makes perfect sense. I love that. That's very helpful. I appreciate that. So let's go back, and then we'll go back into the Q&A, Ben. But I want to ask one question about starting out raising capital, because your story is very intriguing in that you had, in your bio, $7 in your pocket. And I know at that point you had sold Bibles, you had sold some things. So it wasn't that you had that on your first deal. But if I'm wrong, tell me on this, but you had $0 of your own money in your first deal. So
1,000.
You had 1,000. So you
1,000.
raised.
I bought 30% interest into this deal, that 109 units. I talk about it, and guess who was I would love to give accolades to Gene Trowbridge and Kim Taylor right now. They are the father and, really great. And they have written a book also. Both of them have on the Amazon. Great people, syndication, best attorneys. And they told me, they said, Vinney, you could buy it for $1. You could buy it for $1,000. It's the sweat equity. That's what we need to understand. It doesn't take anybody cannot get a good deal. You got to build the relationships. You got to, grind the stone. You got to qualify for the loan. You have to put the things together. So for $1,000, I got 30% interest in that LLC. That brought 70% to the investors and 30% to me. Mm-hmm. They brought all the money. $1,150,000 was all raised. Mine was $1,000. Yes, sir.
So does anything change? If I'm hearing it right,
no,
what you do now is what you did then, right? It's the same.
Exactly. See, a lot of people don't understand. They say, Vinney, how much you got skin in the game? Skin in the game. Hey, I've got my skin in the game with $40 million deal. Loan. I'm signing my life away. What are you doing? You're giving me only 100,000. See, look at that. It's all in the attitude. Yeah. I have 4-page document to show my investors, not a single one. I have 148 investors right now. 148, 0 to 8 to 12, 18, 26, kept on growing without website, without anything. And out of 148, Jamie, I met only 28 face-to-face.
No kidding.
Just 28 of them face-to-face in, outside in the Starbucks or anything like that. But rest of them are all through FaceTime, all through Zoom, and all through this, So it's a digital world. It's a digital world. And they love me because I do quarterly meetings. My whole company, all these 2 companies and then 3 now, 5 companies are totally transparent. My investors can ask for anything they want. Invoices, ledgers, bank statements. Everybody gives rent roll and P&L. But I give everything behind that.
Yeah.
They could drive or fly to the property without telling me. They can shop the property without telling me. Yeah. That's how I built my whole business. Transparency is number 1. And I meet with them every quarter on the quarter, and I record the presentation. I have always done it that way. I never send them out these newsletters and things. I do live meetings and I live answers. They recorded. Those investors who couldn't come in, we send everybody the recording next day, and it's done for 11, 12 years now, every single property.
Amazing. So this is just great tactical advice. I hope folks are writing stuff down. I've got the recording I'll be going back to. This will be on YouTube. I can listen to, but I've written a few things down already. So incredible information. Ben, before we move on, is there anything in this,
from a Melody asking, cultivating relationships, is that how someone becomes accredited? So maybe we can touch on a little bit, accredited investors versus sophisticated investors. What's the difference? How did you start? Where are you now? So
I would love to. Remember accredited investors, it changed actually in 2012, where we have to now not count the home equity into the net worth. Of course, in our regular dealings, we do count it in, but for being accredited by the SEC ruling, one has to have $1 million net worth or be making 200,000 in the last 2 years, or making now and with the same prospect in the future. That's how they do it. But household income can be 300,000 in the last 2 years or now and with the same happening in the front. But the thing is, most of the exemptions we take or the offerings we do, PPM, private placement memorandum, they are family and friends offering, we call it. And that's 506B as a boy. So this, in the boy, we cannot advertise. You cannot advertise at all, but you are able to, what's the word? Get up to 35 sophisticated investors. What are the sophisticated investors? They don't qualify for accredited, but they have known some knowledge of the investing. They have maybe put money in stock market, mutual funds. They have attended some courses, and they have read some books so that they can make some good decisions. That's what that is, right?
Got it. Okay. Some reference to not being live right now.
Oh, we are not?
Somebody, no. Like they're saying it's not a live webinar. I just to be clear, it's 8:34 p.m. on Tuesday, October 8th.
Yes.
I don't know where the not a live webinar came from. That distracted. Maybe that was a phishing thing. So who knows?
Okay.
But we're live, folks.
Maybe ask question and say if some people can. No problem.
I think we've gotten to quite a few of these as I scroll back through. I got to check on Ben. He drops the ball sometimes. So I'm making sure he's got everything right.
Would you like to talk a little bit about my underwriting and all?
Yeah, I do. Okay. Actually, I was going to say, since we've gotten to those and it's about 8:35, I want to make sure we get to that and maybe a little bit of deal finding as well. But let's dive into a deal, your underwriting, how you go about this, whatever you want to do here. Let's
I would love to, Jamie. I was thinking to kind of talk about the $52 million one. That's too big, but let's go one before that. And that was this deal, by the way. I would like to show everybody. This deal I bought in 1 hour. How did I buy it? I went to Atlanta to buy 267 units, which I bought it for $40,000 a door. I was doing due diligence in the parking lot of that property in Atlanta. My broker said, Vinney, do you have 5 minutes? I said, yeah, I'm not going nowhere. He put me in his car, drives me to this beautiful property right here. And then we go there and I took a tour with our community manager. She was all dressed up with her name and everything. I said, you know what? I'm going to buy this because of you, because that's how Monil communities are. We have the uniforms and everything, and all our lead maintenance have different uniforms, and they change colors also every day. It's amazing how we run our operation, because I have been managing all our assets, all our, all the 27 of them. I don't give it to third party. Anyway, then he showed me this one. He says, Vinney, would you take this also? We worked 1.5 months, but we were waiting for you to come here because the seller has a balloon payment, literally balloon payment due coming up in 60 or 75 days. We know that you can close on it. You've done well in Texas, and we have all the confidence, blah, 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 right? So I find 4 mistakes into this catalog, and they invited me. I said, you know what? They're asking too much money, 67 a door, 191 units. My calculations with underwriting, I found out that these loss of lease shouldn't burn off and this and that, all that. So it's only worth 64,000. Guess what? They gave me 600,000 off. The seller accepted the offer. I would love to share with you right here. I'm sharing my screen now.